The halving will be one of the big milestones over the next year that drives Bitcoin adoption. There's no doubt it's a technical milestone. If you have a $10 billion commodity supply each year and you cut it to $5 billion commodity supply, that's going to put technical pressure on the marketplace. The FASB initiative to adopt fair value accounting will be a second big milestone. And approval of a spot ETF will be a third big milestone.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses about Bitcoin. According to Michael Saylor, one of the major turning points in the coming year that propels the acceptance of Bitcoin will be the halving. If you can reduce your annual commodity supply from $10 billion to $5 billion, that's undoubtedly a technological milestone. Billion-dollar commodity supply that will exert technical strain on the implementation of fair value accounting through the FASB initiative will be the approval of a spot ETF will be the second major milestone. Approval or support for an SEC-regulated cryptocurrency exchange. If they identify an exchange that you are aware of, certify or support one, that will be the fourth major landmark. And lots of things Michael Saylor discuss, so please watch the video to end. Don't miss Michael Saylor best advice, and share this video and subscribe our channel Everyday Finance. Thanks.
The halving will be one of the big milestones over the next year that drives Bitcoin adoption. There's no doubt it's a technical milestone. If you have a $10 billion commodity supply each year and you cut it to $5 billion commodity supply, that's going to put technical pressure on the marketplace. The FASB initiative to adopt fair value accounting will be a second big milestone. And approval of a spot ETF will be a third big milestone. Approval or endorsement of a regulated crypto exchange by the SEC, if they recognize an exchange, or certify or endorse one, that'll be a fourth big milestone. Any kind of other guidance, constructive guidance issued by the regulators out of DC would be a fifth big milestone. So I think those are all the major milestones we can look forward to. I think that it's technically it's like I tell you that there's a neighborhood and all the houses are beautiful, and I'm building a school, the best school, and I'm building the best park. And I've got horse riding stables, and I've got a beautiful beach, and I'm dredging a channel and creating a beautiful marina. And we're going to have a concert series of the 100 best musicians in the world playing each day for 100 days, starting next April. I tell you that, and you think, man, I really want to move to that neighborhood or that development. And then I say, well, the bank won't finance the purchase, so you have to pay for everything in cash. And you have to jump through hoops, and you got 6 months of, there's 6 months of application processes, and you're going to have to apply and wait 3 months and do something else and wait 3 months. So it's like, I know I want to be there, but it's still hard to get there. But I know I want to be there. I think that's where we are right now, which is, all of these things are lined up, but you can't underestimate the value of having the bank say, okay, we'll now actually do financing against houses in this development. We'll give you mortgages, 100% loan to value, 80% loan to value, right? That makes a big difference. And it's a conventional mortgage. So I think that once all those planets align, then I think you have like a surge of capital migration.
According to Michael Saylor, best recommendation is to use Bitcoin and the dollar cost average. If you have extra money, you will sweep that money into a Bitcoin for the following 4 years. Investing in Bitcoins is the ultimate asset that takes time to pay off. The longer you have, the more fortunate you will be. As you are generally aware, the standard Average attributes are inferior to Bitcoin's superior qualities, superior real estate or superior stocks, as measured by the S&P index. If you had another concept, Michael Saylor would hold tremendously valuable and highly sought-after real estate, just like Michael do now, something everyone will desire, or unchecked monopolies that are large, tech-uncontrolled digital monopolies. Yet Bitcoin is far superior to both of those. Therefore, if you want to diversify, you possess unchecked digital monopolies as well as incredibly opulent, desirable, prestigious property. And well, everything else will likely be. The world is simply too dangerous for a loser holding cash, bonds, regular stocks, or anything else. Let's back to the interview.
And in terms of how you accumulate wealth, it's, well, A, you have to work pretty hard at something, whatever it is. You have to be good as a doctor or a dentist or IT professional or whatever. You have to do something to generate cash flow. And then you look to acquire the apex property, using your cash flows or using equity or using debt, intelligent debt, right? If somebody, if you could have gone back 40 years and someone would have loaned you money at reasonable terms in order to buy, a city block in New York City or Tokyo or London, you would have done okay. And that's reasonable. You buy high quality, levered long property. But it has to be intelligent debt that you don't get liquidated on. It needs to be a long-term mortgage or very cheap debt that no one's going to call on you. Otherwise, if you could raise equity, right? If and to do something, if someone's willing to invest in you, you're a money manager, and so you go and you raise capital, you invest it in Bitcoin, run it for them, then that's a business. Or if you're a business, if I had a business and I could sell equity in the business so as to buy Bitcoin, that's a rational way to do it too. So you can use equity, you can use debt, or you can use cash flows. And so those are the three ways you get the money to invest. The mistakes you make on the getting of the money is when you borrow the money at too high an interest rate, like don't borrow on your credit cards, right? At 20% interest. Not good. Or when you do a 20x margin loan on FTX and you get forced liquidated on a Saturday night while you're sleeping, right?
Right.
So you don't take bad impermanent capital or expensive capital. That's a mistake. If you sell equity to loan sharks, or mobsters, and they shake you down and screw up your business, that's probably a mistake too. So don't raise money from the wrong set of people. Don't take on debt that has bad terms. And with cash flow, obviously you sell your chairs and you keep your personal cost as low as you can, but I can't tell you how low you can make it. You have to decide yourself. The mistakes you make on the investment side are investing in lots of little companies with a 99.9% chance of failure. That's, speculating in tokens, speculating in companies, as we saw in the S&P 500, 95% of them won't perform even out of the top 500 companies in the world. Most of them are mediocre and they can't keep up with the monetary inflation rate. So trading, thinking you can trade is overconfidence. There's statistically a 99% chance you'll fail. I think in one of my presentations I showed like literally 1% of the days is all the movement. So if you're trading the other 99% of the days, you're probably failing. Right. So there's a 99% chance you'll fail if you try to trade. There's a 99% chance you'll fail if you try to pick stocks. There's and that just leaves you with the basic notion, which is proper asset allocation. You pick apex property that what do you want to own? Here are some simple rules. You want to own something that in a decade, a person richer than you and smarter than you will want to buy from you.
Michael Saylor say you go and you handle money if someone is ready to invest in you. Raise capital that you invested in Bitcoin and manage it on their behalf. If you are a business, Michael Saylor say if I owned a company, I could purchase Bitcoin by selling stock in the company. It makes sense to do it that way as well. You can use debt, equity, or cash flows, and they are the three methods by which you obtain funds to invest the errors that you make throughout the acquisition of the money that results from borrowing it at an excessively high interest rate. If you learned something from this video, then please like this video and subscribe our channel, Everyday Finance, and we will meet in next video. Thanks.